And what are the long-term impacts of that situation? I mean, we're hearing that Russia is still managing to sell a lot of its oil and gas and still making money. The ruble has not collapsed as people had predicted. The economy has not collapsed as people were hoping. At the end of the day, is any of this making any difference?
Yes, it's making a difference because the oil price cap, which the G7, the EU, and everybody's put in place, is actually working. So while Russia has maintained its output, and although it says it's now going to reducing its production by 500,000 barrels a day, its revenues are down. So it has been a revenue hit, but it's also been a remarkable reshuffling of world oil supplies in that India, which imported no Russian oil, is now importing 2 million barrels a day, and it's almost half of India's total imports. I think on gas it's more difficult because that gas that was going to Western Europe is stranded. You're not going to just you can't put that on a ship somewhere and send it somewhere else. So that's another cost that has to be added to the negative side of the ledger for Russia in this war.
Dan Martin here. Let me quickly jump in. So, this EU ban, G7 ban on imports of Russian gas, largely symbolic, unlikely to have anything much effect at all on pricing. But I want to change tack here and get you to talk about oil itself, that is crude. One of the things that experts say the G7 needs to do is to focus on the issue of Greece and how their tycoons, their shipping magnates, have aided and abetted Russia in getting their oil out to the rest of the world. In fact, I mean, they're selling Russia ships, right? They're adding to Vladimir Putin's shadow fleet. How much do you think can be done to stop that?
Well, Martin, two things to say. First, there's another side to the gas story that's going to be a big debate in the G7, and that's the future role of natural gas. And you have Japan saying to the Europeans and to the United States, you guys have supplies, particularly the U.S. We don't. We need to see continual gas development. But Martin, the thing about the Greek ship owners, the fact is that they created this price cap. This was the tricky thing, or the clever thing that they did. They wanted to keep Russian oil flowing because they wanted to make sure there was not a shortage that would send prices spiking. And they're not spiking. They're down $12 or so just over the last month. So, in fact, as long as the ship owners abide by the rules in terms of what price that it's under the $60 cap, then, in fact, that was the intention, to keep the Russian oil in the market. So it's kind of two objectives at the same time that seems somewhat contradictory. But the Russians have created this shadow fleet, put aside the Greeks for a second, of 500 or 600 ships with strange registries in the Middle East or in Asia that is shipping their oil. It's called the ghost fleet of tankers.